Hey guys, it's Hima here. I am back. I had a kind of a rough July, a really nasty cold that is still lingering, but I think I sound much better. And my computer crashed in the middle of all of it, so lots of stuff going on over at Hima Reddy World, but turning for the better now. So I thought I'd come back to you with a FAANG stocks update. You can call this your Wednesday wire, but I'm doing this on Thursday, July 25th, 2019. And of course, an important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So it's like truly been so long that I've looked at these 5 charts that I'm just going to do the analysis here with you. So the weekly chart on Facebook, I didn't have a lot of, or any markings on it, but we can all see here that it's been climbing steadily higher since the late December price action. It's in the situation where RSI posted a lower high versus the recent April peak. That's a little bit of a risk factor here, but more importantly is on the daily chart, you can see that it came up through my 3 resistance levels that I had laid out. So those were blue, and that was the last time I did a FAANG update, which I believe was sometime back in June. So we exceeded all of these targets. So I'm going to take them off now because they're no longer resistance levels. And now we're hanging out after getting above that April high, not quite making it back to the July 25th, 2018 high. Ooh, I just realized that's exactly a year ago. Interesting. Now, look at the latest price action. It's expanding, folks. What do I mean by expanding? I mean like when you think about a megaphone, you know, a cheerleader shouting out of megaphone at a sporting event, that formation, higher highs and lower lows. That's generally not good. And with all that happening with RSI in the bear resistance power zone, I would be on guard right now. So I'm going to give you new support levels as we speak here, right now. Pulling them based off my almost 20 years of experience and showing them to you efficiently here. So each pink line represents a potential support level and the path to get there. So I think we would get to 194.53, then wait and see what happens. Price could stabilize there. But more likely, I think we'll come back into the June 26th range. So not necessarily end of the run up for Facebook, but I definitely think a little bit of choppy times ahead. Now let's move on to Apple. All right, Apple on the weekly chart is in this narrowing price action. It's not a small pattern by any means, but it is this narrowing price action. So you can check this out. What I want to look at first is the midpoint of this May 3rd weekly chart range. We're hanging out right near it. See, last week we came up close to 207.21, got to 206.50. Right now, we are trading above 207.21, but on the week, not able to close above it, and potentially confirming this falling resistance trend line back from October 2018 and May 2019. So let's look at the daily chart. And again, I haven't touched these charts in a while between my being sick and my computer crashing. So you're seeing me do my analysis in real time here. All right, so in the daily chart, whenever I had posted on this last, I had all these resistance levels up ahead. So this one's out, this one's out, this one's out. Check this one out, guys. 209.23. We are just touching it. Today we came 1 cent above and are hanging out. So I think this is going to be a very strong resistance. So I'll make that line a little thicker. And all of this with RSI just kind of churning in the bear resistance power zone. I would draw these couple trend lines here starting June 25th low and July 1st high and just kind of observe the price action. So the first support to keep an eye on, latest low July 19th. After that, we have a series of daily higher lows. And that all comes into play while the price still staying above the 200-day exponential moving average. So whatever weakness is coming in on Apple, I think is reason enough to not keep buying right now, especially because here's that trend line I drew in the weekly chart. See, we're coming into potential of confirming falling trend line resistance. But I don't think that the pullback will be that severe in the big picture. I think 190-ish is pretty good support. Moving on to Amazon. Okay, so Amazon has been chugging along nicely. We did have an inside week last week. Inside bars are signs of market indecision or price contraction. They're really just a time pause. Okay, so instead of price making a correction to the downside, it's just kind of using up time while it figures out what's going on. Again, I'm doing the analysis live with you. Haven't touched these charts in some time. All right, so I had all these resistance levels that were cleared. What are the resistance levels to look at now? Well, at the time I had drawn these three blue lines, the next one would have been this high from May. That was taken out. And the next two I see are the all-time high from September and then the October high, which is very close to it. So notice that we have pierced the October high, okay, at 203,319, but are still below the September high. So resistance still in play there. As for support, this is now the key swing low on the daily chart that ties into the weekly picture. We now have a couple other support levels along the way. Old high from June 20th, this 1935 area, and this latest higher swing low, 1872.42. I think if this current price correction persists, it's likely to stabilize somewhere between these two levels. And now these trend lines you can still keep on, they're just not really relevant to the current price action. But I like keeping them on my chart unless I see a real need to toss them out. All right, so we are moving along with FAANG analysis. Now we move on to Netflix. All right, Netflix on the weekly chart. So had a nasty gap down after a recent earnings announcement, and that's reflected in this big giant red bar from last week. Where are we now in the price action? Well, first thing I want to check is if this move lower has retraced 50% of the previous upside move. And it has, and it's holding. Also on the weekly chart, RSI is in the bull support power zone. That alone, okay, this type of price support and this RSI action, that alone doesn't say, hey, on a weekly chart, Netflix is ready to buy again. But it does start to paint that picture. So now I'm going to look at the daily chart. All right, so the last time I had this chart up, I had a bunch of resistance levels laid out. We have exceeded them, except for one. 385.99 was the May 1st high. We came up real close on July 9th and are backing off, or have backed off, obviously. Here's the gap. So now when you look at support levels, we violated 318.60. 298.72 still lies ahead. 275.79 still intact. And now I've put two new ones if price continues lower from here. But let's zoom in and see if that's likely the case or if we're going to get a recovery here. So I like looking at the middle of gaps like this to see if they align with other price support or resistance. And here you can see the middle of this gap is very close to the current 200-day moving average, exponential moving average. So I'm going to add in a resistance here at the middle of gap. So I got to get my blue line in shape here, 346.15. Okay, and then I'm going to put another resistance marker for the price bar after which the gap unfolded. So that's the low of the July 17th range. So the current price action is looking promising for short-term upside on Netflix. However, there's enough overhead barriers. There's all these old bottoms here. And there's the actual high of the gap, so that becomes another resistance level. Sorry, the low of the gap, but the high of the price bar that made it. So lots to overcome here, but perhaps, you know, this was it and we will see Netflix resume higher. I'd give it a little more time before confirming on that. In part because, yes, it's recovering, but it's only coming up out of the bear support power zone. So I just want a little bit more of a clue that this is going to sustain before considering it a place to add positions. All right, now we wrap up with Google. Let's just look at the weekly chart price action and the weekly momentum and see if we get any clues. Well, we had a pullback into the December range, real close to the midpoint of the December 28th weekly bar, then been rallying higher. This rally higher has not yet taken out a lower high, and I'll get more specific on this on the daily chart, but see 1194.16 is what I want to see price get above to suggest a return to the all-time highs. It is encouraging that it's still lifting up out of the bull sport power zone though. So let's look at the daily chart. Here it is as I last left it. So it came through a bunch of resistance levels. I'm going to move those out now. And you might suspect that after the way we analyzed the gap on Netflix, that I also want to find the midpoint of this gap right here. So 1236.35. Especially the bigger the gap, the more the midpoint might be potential resistance. 1236.35. Real life analysis, folks. This is how it goes. Okay. I also want to add. All right, so this is the new set of resistance levels that I'm watching based on the current price action. As for support, so these three thick black trend lines were fanning trend lines that were very helpful in analysis into the end of last year. And see how this is not so useful anymore, the first trend line, so I'm going to just make it a dash line. But I'm just going to keep it on because price action was able to get below it, but kind of whipped back above and then held as support again. Oops, got to rehook that. And so that to me just has me want to keep it on there, but I make it a dash line so that I know it's not as important as a solid trend line. Okay, now what? Now let me come in with a new color and see the angle of where we are now. And let's also look at how much of the fall from the April high we have reclaimed. Almost 50%, guys. See? Getting really close. So where Google is right now, I think it's more likely to continue to the upside short term. So what that would look like is breaking above this price action right here. You could even draw a little trend line to shape this consolidation. And if you get a closing break above 1148.86 on the daily chart, that would suggest further upside, and I would think to 1200-ish first. If it doesn't do that and instead it starts to get weaker, well then here are the support levels to monitor. I need to move things around to get them there. Okay, so let me steal my lines that I had down here. And put them into place. All right. So I picked a low that was within the latest daily upswing, then the low that's defining the latest daily upswing, and then the most recent kind of ultimate low that's holding this whole move higher. So that's what I'm seeing on the FAANG stocks, guys. I hope that was helpful for you, and I'll catch you next time. You can sign up at himareddy.com/gift to get my Wednesday wire as soon as I publish right to your inbox.